Everybody, thank you all for joining. It is Jeff Hammer. Thank you so much. I see you out there. It's Wednesday. I had to check what day it was because I'm running on like no sleep for 3 days. So bear with me here. But this is an interesting one. This is a story of 90 days. Sometimes things happen in cycles. 90 days happens to be a quarter of a year. And we're going to look at timeframes before and after the halving. And I have calculated a couple of very interesting things. Not only when things will go bonkers, but actually the price target as well. Date and price. And this is fun. This is an analysis of history and supply and demand. And we'll see if it works out because I'll be here every day as well. And I'll eat my words if I'm wrong. But things are really, really sizing up to be very special. So let's go. This is called When Supply Crunch, because this is one of the top questions I get. So let's go. Wrong thing. And disclaimer as well, just for people to know, my Twitter was hijacked last night. We have literally tons of people trying to help out and make it happen. But you will see very weird posts that are very out of character from me. Do not click on anything. It's not written like the way I write. It's not comedic. It's not sarcastic. It's not the type of content I push out. So it's very obvious they are scammers. But we'll get that back hopefully real soon. So stay tuned. Everything else is fine. Patreon is fine. Discord is fine. YouTube is fine. Google is fine. I was actually fortunate enough to have a dummy email tied to my Twitter account. And somehow, despite 2FA with the YubiKey, it was compromised. So we'll try to figure that all out too. As to why that happened, just beware, everybody. Be very careful. Lock your security down. Linda, thank you so much. And a big thank you as well to everybody on Patreon who's been so gracious during this time, who are reporting these bad things. But from Patrick, I'm a new subscriber on Patreon. I love the content. Well, thank you so much. Welcome in, Patrick. It is great, and it's going to be a great year. And let me explain why. First of all, inspiration for this comes from Milk Road. Shout out to Sanjay as well, who made me aware of it. Now, they were looking at two trends, okay? The big rally usually comes after the halving. Yeah, we know that, but how soon after? And also, the rally before the halving has gotten smaller and smaller over the years. But remember, 2020, March 2020, we all know what happened during the C19 times. So that is a bit of an anomaly. But I'm going to break all that down and show you a couple of things. And then their Milk Road prediction is for Bitcoin to hit $100,000 3 months after the next halving. Let's see. So they have their own logic. I built my own, which is kind of interesting. But first, let's talk about the elephant in the room, which is the ETFs. These are the ETF flows up to date after 18 days. Now, what's stunning about this, after 18 days, 180,000 Bitcoin was absorbed into 9 new ETFs. You can see 140 flew out of GBTC, but into the new guys. So it is a big deal. The question is, what's happening next? We know Grayscale is slowing down on their dumpage. That's almost going away. And some of the other big guys are really ramping up. So let's break this down to some numbers and compare it to how much Bitcoin is actually produced. So there's going to be quite a few tables here, but I'll walk you through them as best I can. So first of all, I calculated the total Bitcoin production in 2024 is only 216,000 Bitcoin. The first 4 months will produce 900 a day. That's 108,000 approximately. And the next 8 months will produce 450 a day, 108,000. The total is 216. So we all got that pretty clear. But remember, 180,000 went into 9 new ETFs in 18 days. That's how much will be made, again, assuming nobody else is buying Bitcoin in 2024, only 216,000. But there's more. Now let's look at from the time we have now for the next 12 months rolling out. And all this will make sense in a minute. So the daily production for the next 70 days to the halving is 900 Bitcoin times 70 days is 63,000. Then we have the next 295 days, going out a year, 450 per day, 132,750. The total of these two is 195,750 for the next 365 days, and the ETFs already absorbed 180,000 in 18 days. And that the most important number here is that is 92.3% of the next 12 months of production. That's big. That's very big. But there's other people buying. It's not just the ETFs. So let's look at another set of tables here. This is the ETF consumption scenarios. So we can assume a couple of things. We can assume the rate continues. That would be 100%. Thank you, Mr. Mike out there. If that is the case, and the ETFs continue to suck in as what they're sucking in right now, that would be 2.5 million Bitcoin over the next 365 days, which is 1,810% of the actual production. So there isn't any to candle that, okay? At 3/4 of the current consumption, that's 1.886 million Bitcoin. Again, 1,400% of the actual production, 14 times the production. 50%, if it slows down to half of what it is today, that is 1.25 million Bitcoin, 9 times the production. If it slows down further to 1/4 of what it is today, that is 628,000 Bitcoin, which is 450% of the actual production. So that is scary. Just the ETFs, assuming we throttle them down to 1/4 of what they're doing now, there still isn't enough to go around. That's what this whole story is about, the supply crunch. So let's look at another number. Let's look at the gold ETF chart. What happened after the gold ETF launch? People say, oh, it didn't really do anything. Well, it did actually. It went up for 8 straight years. There was a little glitch sometime in the year, what was that, 2009 approximately? But that actually was the global financial crisis. And it's funny, even gold went down during the global financial crisis. So it shows you a risk-off asset can still go down during a crisis. But this is crazy. This is what gold did for 8 years. And it went through a very, very, very bad, serious financial time too. So that's gold. Now we have 69 days. For my model, I assume 70 days, give or take. But we have 69 days to go till the Bitcoin halving. So when are things going to go bonkers? So let's look at some history and tie it all together. Again, sorry, more numbers, but these are fun to play with, and I personally enjoy it. So here we are. We have the halving date from 2012, 2016, 2020, and I put in the estimates. These green numbers are estimates based on history. So if we go back to 2012, the 90 days before the halving, I did say that 90 days is very, very important. 90 days before the halving, the price of Bitcoin was $2.54 in 2012. The price at the halving was $12.35, so it went up like 400%. Now, what's important here, this is kind of crazy, and I know it was the first cycle, so it's a bit bonkers, but 90 days before the halving was $2.50. At the halving, it was $12, and then 90 days after the halving, it went to $1,000. All right? So the delta, I'll break this down because we're going to go through this in some detail. The fourth column, the delta from 90 days before the halving, again 386%. 90 days after the halving went to $1,000. That was 8,000% from the actual halving date. Again, it's insane, I know, but what's really interesting is when you look at the price action 1 year leading up to the halving and then the performance 1 year after the halving, it's very similar to the 90 days. So I'm going to, before we get to the other halvings, I want to make sure you get this because it is tricky. All the action for Bitcoin happens 90 days before the halving, which is the zone we are in now, to 90 days after. After that, relatively flat. This is why I believe bonkers time will happen real soon. So let's look at the other years as an analog and see what we can come up with. So 2016, 90 days before the halving, $269, and the price at the halving, $650. Bitcoin went up 141%. Not bad. That's just in 90 days. And then 90 days after the halving, it went up to 2,500. So literally in 180 days, it went from 269 to 2,500. That's 1,000% return. Or in just 90 days after the halving, it went up nearly 300%. And look at the detail. The 142% in the year leading up to the halving and the 284% versus 285%. Literally, in 2016, All the action happened 90 days after the halving, and of course before the halving. After that, the next, next 3 quarters of a year, actual Bitcoin price went down. This is why it's so important, and when I'm doing this is try and explain, it's important to be on the train right now, 90 days before the halving. And today we're seeing Bitcoin go up $1,200, $1,300. It's at 44,200 as we're speaking right now. After a very good day, it was under 43K this morning. Now let's go a look at the next year. So I hope everybody's following with me here. This is too important to miss. Then we got May 11th, 2020. Now this is an anomaly year because of March 2020 where everything fell. Bitcoin fell down below 4K. But you can see here, the 90 days before the halving, it was 7,300. If it wasn't for C19 in March 2020, the price of the halving probably would have been a lot higher. Okay, but still, the 90 days went up 20%. 90 days after, it went from 8,000 to 57,000. That's a 541% gain. All right, and if you compare the 20% to the 17% for a year before, year after, and the 541% to the 559%, I mean, you can't make this up. I'll say it again. All the action happens 90 days before the halving, 90 days after, and we are in that window right now. So I'm going to take conservative estimates of history, average them, and then multiply things out from where we are today to give you an estimate of where we could go. All right, that's the green box here. Of course, this isn't financial advice. This is just history and mathematics and numbers. So I ignored the 2012 scenario because that was just too crazy. And then I plugged in the average return for 90 days before the halving. That's an average of 141% plus 20%. That equals 160 divided by 2 is 80% average. If you multiply 80.83% times the price today, 41,483, which is now 42K or it's 44K, has gone up even more, you get $310,000. And I know, no, that's, sorry, that's the before action. Okay, so I'm getting all muddled up here. That would be 75,000 based on the 80% return, which is the average of the delta 90 days before the halving. I did warn you, this is complex and I'm very tired, so brain isn't working too well, but I hope everybody's tracking. Now let's look at the 90 days after the halving. Here's where I get the number 310 grand. This is an average of the 90 days after the halving return of 285% in 2016 and 541% in 2020. Average of those is 413%. You multiply that by the estimate of the price at the halving of 75,000. That would take us to 310,000. And I know that's hopium and I know that's ridiculous, but I'm going to throttle that. Okay? Take it down. Real estimates based on analysis. But the one thing that is very different this cycle is we are going into a diminishing supply for the first time ever with far more demand. As I said before, here in these numbers, there is way more demand. Even if we take a quarter of what happened over the last 18 days, that's still nearly 5 times what's produced by miners. And that assumes miners will sell every single Bitcoin they have in real time, which is not theoretical. That also assumes nobody else will buy any Bitcoin. That's why I'm bullish. And this is why, getting back to brass tacks, supply is falling very fast. But there's more. So let's talk about money flow. So first of all was the estimate based on the actual Bitcoin supply. Now what I did was I assumed the price of Bitcoin, average price for the next 12 months is 80,000. All right, currently it's $44,230. Now I took the money flow that's coming into the ETFs. So we did basically, I can't remember, $7.7 billion in 18 days, annualized for 252 days. That's $109 billion. So assuming a Bitcoin price of 80,000, you take 109 billion divided by 80,000, that is 1.36 million Bitcoin. That is 1,000 times more percent than actually exists. Again, assuming two things. One, the money flow is continuous at the rate it has been for the last 18 days. and the price of Bitcoin is $80,000. So I've doubled the price of Bitcoin to reduce the demand on Bitcoin. So if we go to a quarter of the supply, that's like me taking, think about that, half times a half, but a lot less. So let's explain this. So if we go to 75%, that's 82 billion of dollar flow for the next 12 months. That's a million Bitcoin. It doesn't exist. That's nearly 8 times the actual production. If you go to half the money flow, again, 80,000 Bitcoin, $80,000 Bitcoin price, that takes us to 683,000 Bitcoin demand, which is 5 times the amount of supply. And if we go to the very crazy time, just 25% of the money that's flown in over the last 18 days, we're taking a quarter of it, and we're doubling the price of Bitcoin to 80 grand. The demand is still, get this, still 2.5 times what is actually made by the miners. And that multiple is, the demand will be 341,000. Again, super bear scenario. Let's go back and remind you of how much there actually is. This will be the amount of production, 195,000 Bitcoin in the next 12 months. All right. These ETFs alone, assuming nobody else buys, will suck it all up. Even if I double the price of Bitcoin and throttle it by 75%, take it down to 25%. So I hope everybody's tracking that this thing is scarce, what I've been talking about for a long time, but I'm backing up with numbers. Now we're going to look at some charts, and we're going to estimate price based on charts. This is Bitcoin on the LILO, the layer in, layer out model. Right now, it's targeting a Bitcoin projection in a year or so of about 126,000. Remember, based on history, based on what I just showed you, theoretically, if history repeats, and we don't even assume the supply crunch, we're looking at a $310,000 Bitcoin. I think it's an easy 80K and easy 126K, which actually coincides with my 130K target for this bull run. But again, it could all happen within 90 days of the halving. That is the crazy thing. But take the gold ETF as an analog. It could continue for 8 years. This is intermittent fasting. Thank you so much. And I do the same, by the way. Fast intermittently. This is just the most beautiful economic supply and demand experiment we've ever seen in our lives. But there's more. Let's go. Quick reminder. This is the halving, what it looks like. People should be startled to death about this if you're talking to your friends. We're going to 3.125 Bitcoin reward per block, starting in 69 days. You can't make that stuff up. Halving with crazy demand from just 9 American ETFs. Forget the Hong Kong ETFs, the Chinese ETFs, and the European ones, and the Brazilian ones, and the Swiss ones, and all the people that are beginning to come in, and then the retail FOMO that's going to come in. It's going to be crazy. Now, let's talk about some of the Bitcoin takeaways, and then we get into some more detail regarding the actual scarcity, and then I'll get to the actual price target and the time it'll happen. Very sandbagged, by the way. So we have the ETFs. They're sucking in far more Bitcoin than are produced, right? Even if only the ETFs buy Bitcoin, it's still in a total bear case that I've assumed more than 4 times the actual production. And that assumes, as I mentioned before, miners sell it all at the same time. The average daily ETF Bitcoin demand is 10,000 Bitcoin, all right? Significant accumulation by the ETFs is on track at this rate to accumulate over 2 million Bitcoin. There's only 2.3 million on exchanges, and I guarantee you, not even half of those are for sale. The people that are holding those are waiting for much higher prices. So it's not like somebody can come in the next 12 months and buy 2 million Bitcoin. It's not there. Unless, of course, long-term holders want to sell out of Bitcoin and go into, I don't know, a disruptive stock or an altcoin or something. But that is very profound. In addition, at this rate as well, with increasing adoption, more than 4.3 million Bitcoin by the end of 2025, which is completely impossible. It's a dream number. It's impossible for these things to suck in that much, unless, of course, the price completely goes to the moon and people start selling their Bitcoin for villas in Italy and Spain and maybe El Salvador, who knows where. But that is kind of crazy. In addition, there will be increased demand coupled with this diminishing supply, which suggests an insanely bullish outlook for Bitcoin's price. Then FOMO kicks in. All right. So potentially, Sir Winston, thank you so much. 90 days after the halving, we could already be going bonkers. And then all the news channels and all the newspapers and everybody's talking at the water cooler about Bitcoin. Then the FOMO happens, phase 2, which goes crazy. Now, quick reminder of this is the first halving for Bitcoin that we're going into a diminishing cycle. See the orange there on the chart is going down. Less supply. 78% of all Bitcoin held by long-term holders. All right. They're not shaking this thing loose. I estimate at least 5 million Bitcoin is lost. And these things, these ETFs need 4.3 million Bitcoin over the next 2 years. It's not going to happen. Now, there's also other people buying Bitcoin too. Michael Saylor is at it again. He just bought another $37 million more of Bitcoin. It's compared to what the ETF is sucking. It's no longer a big amount, but 850 for 37.2 million. They hold it now exactly 190,000 Bitcoin, and all our models are updated. And the question I also get all the time is not only when supply crunch, but what is MicroStrategy going to do? Does it still have value with the ETFs? Of course it does. And I've explained this before. Every time they buy, they take earnings from their business and they pump it into Bitcoin. Not only does it reduce the supply of Bitcoin, but it increases the value of their balance sheet, which increases the value of the shares, which increases the amount of indexation that needs to happen for the funds to buy more MicroStrategy shares. And it's a self-fulfilling prophecy and the price goes up. Okay, so let's look at the ARB calculator right now. Now, if, again, super conservative, if Bitcoin goes to 130,000, which is 120,000 my target price this bull run, the actual price of MicroStrategy will go to, let me make sure I read it right. I've got a floor price in here of 1386 and a roof price of 1894. Now the beauty of MicroStrategy is extremely volatile. Just look at the swing today. $74 swing today. All right. It's just a complete massive V-shaped recovery. And that's the beauty of this beast. If you are a trader, if you're a hedger, if you like to sell call options, this is how you can play this game really well. Now, even if Bitcoin goes to the floor price of 1386 for MicroStrategy, which means Bitcoin's at 130K, that's 173% return on investment, nearly a 3x on where you are now. So, and it could potentially go to $1,890 too. Let's look at what LILO says in MicroStrategy 2. This has a target right now of $1,213. So again, price is $500. Still very achievable. And actually, that target is very coincidentally the same all-time high it had back in, I think it was late 2020 or very early 2021, when things went completely bonkers, when people figured out, whoa, this company's putting a lot of Bitcoin in the balance sheet. What's going on? So anyway, we'll see. Now, back to the ETFs real fast. These things are still showing a lot of steam. Yesterday was a quiet day. You saw my posts as well. Patreon. Normally I do it every day on Twitter, but Twitter's hijacked. It'll come back soon. So be patient. Stay away from my Twitter until I let you all know it comes back, okay? In the meantime, you can see the top one there, IBIT, is doing 13.7 million of volume today versus 8 million for Grayscale, 5 million for Fidelity. So BlackRock is really coming into its own right now. They're beginning to turn on the machine, but they have not turned on Aladdin yet. Aladdin is their AI allocator that tells funds how much to allocate. Once they set it to 1% Bitcoin allocation, this is going to literally go to the moon, and there's no supply. There is no supply to satisfy the hunger of a 1% allocation for a company with 10 trillion under management. Absolutely crazy. And a quick reminder too, another question I get a lot is the fees. Where do I buy? Which one is better? Well, here's a quick reminder of the actual fee table. You can see BlackRock is 25 basis points, and it'll be 12 basis points for the first 6 months or the first 5 billion of inflows. By the way, they're getting very close to that right now. So you could look there. And then you have the other big one, Fidelity, 39 basis points. I think BlackRock will suck in the most. You know, winner takes most, like every other industry in the world. Let me see. And by the way, the final part, which I promised, when supply crunch, by my estimates, All right, you can mark this in your little calendars and see if history and the model is right. We are 165 days away from either an $80,000 Bitcoin or $130,000 Bitcoin, somewhere in between, by July 16th, 2024. Assuming history, assuming math, assuming supply, assuming money flows, and heavily sandbagged at only just a quarter of the current run rate of money flowing in. So that's the story. As I say, sunny days ahead. The future is bright. Thank you all for coming. Hope you like the story. Don't forget to subscribe if you want to get smarter. That's what we do here. I won't waste your time, but you will learn something new every day. So let me know what you think below in the comment. And again, stay healthy, stay locked down, and it's going to be a fun. What many days did I say it was again? 165 days, and then we can all think about what we do next. It'll be fun. So hope you like the history. Hope you like the lesson. See you all tomorrow. Thank you, everybody, and thank you to the moderators in the chat. And I missed one thing here as well from Billy BTC. Thank you so much as well for coming. Good night, everybody. Bye-bye.